Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for making time today.
Good afternoon, Devin.
Well, let's start with stocks, and it was a really rough session for U.S. stocks on Tuesday. Tech shares on the Nasdaq down almost 4%. The Nasdaq's now at its lowest since December 2020. There are growing fears of a recession. Morgan Stanley is one that sees a bear market. What's the story in the global markets today?
On Tuesday, the Dow Jones Industrial Average declined 2.4%, while the Nasdaq Composite lost 4%. Both indexes are on track to lose at least 4% this month, with the tech-heavy Nasdaq, which on Tuesday posted its largest one-day percentage decline since September 2020. The Nasdaq is down more than 12% in April. Fears about the resurgence of COVID-19 cases in China and strict lockdowns imposes a fight to fight the outbreak there have heightened investors' concern about the global economy. And that prompted choppy trading in recent sessions. Also, inflation is weighing on the companies and consumers, while the Federal Reserve indications that it will quickly tighten monetary policy threaten to drag on growth. In mainland China, the Shanghai Composite Index gained 2.5% today, and Tokyo's Nikkei 225 Index dropped 1.2%, and Hong Kong's Hang Seng Index remained almost flat today.
Well, today the Korean market was down significantly as well, not as much as the U.S. Samsung shares down for a fourth session in a row. Only a very few bright spots today, and one of those was gas and utilities. Tell us about the domestic market, Professor.
Domestic markets were hugely adjusted to downside today, too, along with yesterday's U.S. market drops. It means that domestic investors are also concerned about China's COVID situation, global inflation, and interest rate hikes by U.S. Fed and Bank of Korea. The benchmark Kospi dropped 1.1%, and Kosdaq dropped further by 1.6% today. The Kospi has retreated over 0.6% over the last 6 trading days, including today. Most of large cap stocks also retreated today. Samsung Electronics dropped 1.7%, and second largest cap stock, LG Energy Solution, also dropped 1.3%. But the fourth largest cap, Samsung Biologics, gained 0.8% today. In Kospi market, foreign investors and institutional investors led market drop with 918 billion won combined net sales. $1 exchange rate increased from yesterday up to 1,262.51 per dollar.
Right, that's the highest rate we've seen in quite some time. I think I was looking at it over 10 years. It's not been that high. Well, Professor, consumers in Korea are expecting inflation this year to come in at 3.1%. That's the highest level in 9 years, and perceived inflation over the past year also at a high. This is now, of course, not especially high compared to some countries, but what's driving things higher, and is inflation a concern?
According to Bank of Korea's consumer survey in April, Korean consumers expected inflation hit the highest level in 9 years, as oil and commodity prices are rising at a fast pace. Bank of Korea says consumers in April expected the country's inflation in 1 year to grow 3.1%, up from the previous month's forecast of 2.9% rise. This is a very crucial point, actually, of the inflation spiral or longer than expected inflation. When consumers expect inflation increases, they ask higher salary in next wage negotiation with employers. Therefore, the increased labor cost further increases all goods and services prices. In the end, the higher inflation period is extended. The actual inflation of March was 4.1% on year, which was the fastest rise since December 2011's 4.2%. So if April's inflation is higher than that of the March's 4.1%. Current high inflation goes longer than expected.
Indeed, we'll have to watch that closely, Professor. And now, inflation like this is raising expectations that the Bank of Korea will hike interest rates. At this point, forecasters are almost certain that we'll see a rate hike next month. How big do you think that'll be? Also, why are they doing it if it's not going to affect some of the main things causing the higher prices, like fuel?
As we talked about, the 4.1% on-year inflation in March was much more than market's expectation. In addition, April's consumer expected inflation of 3.1% is also higher than market's expectation. A surge in energy prices and weakness of Korean won currency added to sharp rise of domestic inflation. Actually, even the core inflation rate, which excludes volatile energy and food prices, so the sharpest increase since December 2011. In March, the core inflation rate was 3.2% on year. The second month in a row, it exceeded 3%. So this high inflation momentum, along with U.S. Fed's stronger and faster steps to raise key interest rate, will lead Bank of Korea to raise domestic key interest rate faster and higher. So it is highly expected that Bank of Korea would raise the key interest rate by 0.5% in the next monetary policy meeting. But in terms of stabilizing import price stability, there should be more control of exchange rate of over Korean won's value against U.S. dollars.
Right. It has been steadily rising. The dollar is getting stronger and stronger all for the past year or so. Professor, we have to leave it there for today. Thank you, as always, for making time for us. So we appreciate it.
Thank you very much.